All right, so Kamala Harris supports a transaction tax on stock trades, bond trades, just investment transactions. What's my take on this? Says everybody's friend from Massachusetts, Meg. So let's read into this here. She sent me a quote from an article that she had read. Kamala says, I would tax Wall Street stock trades at 0.2%, bond trades at 0.1%, and derivative transactions at 0.002%. I assume the derivatives because call options and buy right cover strategies and all these things, covered calls and stuff are not very they're not very heavy in terms of cost, but that's still 0.002%, and that's weird to me, especially if derivatives are the source of all evil. I don't know. That's odd. That's a significant discount on derivative transactions relative to stock and bonds. I get the bonds being half as stocks because bonds are, again, fixed. Stocks have unlimited upside and downside, but be it as it may, unlimited upside, but a fixed downside. Harris has said the transaction tax would raise $2 trillion over 10 years, and Biden has expressed some support for those ideas. I guess to throw away my credit, my street cred with the right wing, I got no problem with a transaction tax on trades. I never have. I've always found it odd that high frequency traders, hedge fund managers in particularly, can buy, sell with these computer algorithms. Now, look, this isn't a newfangled thing. As I showed you back in 1987, the week of or the week after Black Monday, and the Louis Rukeyser show, they had a guy from Goldman Sachs talking about high frequency transactions and trading and how it wasn't really ownership anymore. It's all algorithmic. And so here we are in 2020. It's the same thing. Everyone, HFT, high frequency transactions. And I don't even know how much it raised. But I don't know why. I have no qualm with that. None whatsoever. But Josh, you'll add fees to an index fund. Well, not that much. Don't you remember reading Warren Buffett? Warren Buffett said he would give you 30 chips to own, and essentially that's 30 stocks. And you can buy and sell as much as you want, but until those 30 are gone, you're done. That's it. So you basically have 30 transactions you can make over the course of your life. And that's all you need. And now Warren Buffett obviously makes more than 30 transactions as he runs Berkshire Hathaway. But from a pure investment perspective, that makes incredible sense. You got 30 chips, 30 stocks, or 30 trades you can make. That's it. One a year essentially for retirement. I get no qualm with that at all. None whatsoever. I'm telling you, the fact is it will raise money from the people who have made the most in Wall Street. Hedge funds, George Soros's of the world. The dude who, what's that guy's name? The green guy who ran for president. Oh, just these hypocrites. I got no qualm with that at all. None whatsoever. But Josh, they could raise it more. Okay. I mean, it's always, but they could do this. I'm just looking at right now, the here and now. Yeah, they could raise it more. They could get rid of it. It could have unintentional consequences. We know this, absolutely. At the end of the day, though, high-frequency trading is an actual fact. And so let's just take a look, shall we? What is the volume on the S&P 500 today? Let's just take a gander. The volume was 2.24 billion shares exchange hands in the S&P 500. 2.24 billion. How many investors are out there? Well, there aren't 2.24 billion because there's only 330 million people in the U.S. How many of those are investors? Let's say a tenth, just for simplicity. That's 33 million investors in the U.S. 2.24 billion transactions on the S&P 500 happened today. That means some people are trading multiple times. That's called high-frequency trading. A lot of that's algorithmic. NASDAQ had another 3.35 billion. Hey, big man. All right, let's look at the, so that's 3.35 billion. Let's just look at Apple stock. All right, so look at Apple. Let's see here. Here's Apple stock. That had 40 million shares transpire today. Let's look at Amazon. Buddy, no, I got growl. Oh, yeah, that's right. Pablo wants to make sure that you don't forget to paw the like button. Make sure you paw the like button. Amazon had 3.37 million transactions today. Now, I mean, are some of these part of the S&P 500? Probably, so it's double count, but still, I mean, that's billions of shares traded each and every day on the exchanges, be it the American Stock Exchange, be it the New York Stock Exchange, be it NASDAQ, all that stuff. So what does that do? Does that help investment? No, it's speculation, man. That's all speculation. Investment is buying a company that you believe has growth potential and will continue to pay its dividends. That's what you're doing. You're not speculating. That's why I hate when people say, "Oh, I can make this or you should buy gold now. It's up 10% or whatever the hell." It drives me. That's not investing. That's speculating. If you want to be a speculator, you might as well go to Las Vegas. What is it, roulette board or whatever it is, thing is you got a 52% against you, 48% for you. That's better odds than most of these stocks, especially the pink sheet stocks and stuff. So to have a transaction tax, if it raised, what did she say, 10 million over 10 years or something like that, or 10 trillion, I forgot what she said. What did she say? Let's see. She said it'll raise, it raised 2 trillion over 10 years. So that doesn't seem like that much, but we need money to shore up Social Security and Medicare. To get off these rich, fancy schmancy, good time rock and roll plastic banana, you know where I'm getting that from, hedge fund managers, it's a step in the right direction for sure. I got no qualm with it. None. I bet Trump is on board with that too. I bet he is. Trump is also the guy who said we got to get rid of quarterly reports. Let's just go to annual. And I love that too because it's nuts. You got quarterly earnings reports and forecasts, all that stuff. It completely takes out the big picture. It makes investing in short-term increments and speculation as long-term and true investing. I expect to put this money in. I expect to collect it with profits in 5, 10, 15, 20 years. Just going back to Warren Buffett, you got 30 chips. You can trade 30 in one day, but when you're done trading, that's what you hold for the rest of your life. That is the way to go. Yes, I am sure some index funds would probably be a little bit more expensive to own. All right, we're already down to 4 basis points, man. So if we raise to 8 basis points, that's a doubling of the expense ratio. Whoa, I got no qualm with it at all. Now, I'd love to hear comments. I'm sure I'll be taking arrows and unsubscribes because anytime I talk about taxes, people are like, that's not true republicanism. Yeah, true republicanism is DOA to me. True being the laugher curve, because I love the laugher curve, but it's a non-starter now. True being, what's the other one? We got to cut taxes at all times. Hardly anybody pays income taxes anymore. True being, what's the other one? Government spending. We got to cut back on government spending. The Republicans sing a tune, but we know they're fake. So at some point, you got to recognize, yes, that sounds good in theory. It's not going to be incorporated. So you might as well go along for the ride and offer a way to change it so that way you can take control of the messaging, because right now the Republicans' messaging, in my opinion, is DOA. They've sold their soul for rock and roll on tax cuts for everybody, which not many people pay income taxes, and no more government spending. And yet the minute they get in power, they spend like drunken infantrymen. So let's just call a spade a spade. Say, look, we got to raise revenue. Social Security and Medicare are hurting. If we don't raise revenue someplace, it's going to hurt even more. So let's get this done, and I got no qualm with it. See ya.